The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. We are getting ready to take a look at some of these things here from technical land, and hopefully we'll be able to put them together for us and see how they work. And we will go one at a time. The first chart that I posted in today is the VIX index. Over the last 3 or 4 weeks, you can see these little triangles on the bottom are basically showing the cycle format that's there. It's basically a 22-day format. From low to low is 22 days. Low to low is 22 days. The important thing here is if you'll notice the crest of those blue cycle highs that you see there, those are telling you that the market is beginning to lose its bearish momentum. Usually when it's really bearish, these cycles will top on the far left side of the circle. As you notice what's happened over the last week or so, we've crested right in the middle of the cycle. We also have the ABCD structure on the downside, but we still have the potential for the market to go down, one more time to new lows. There's still that larger ABC that's still out there. We're going to walk through some of these things in the stocks this morning, and then I wanted to walk through something with you on a pattern that Jim Twentyman looks at, the Twentyman line. We have a couple of these that are lined up. It's a very rare pattern, but they are coming into play. And one of them is one that we have a really high interest in, which is silver. So we'll cover those as we move through the morning. Okay, that's what I wanted to cover on the volatility index for VIX. This market is just totally complacent, folks. It is set up to break like no other break we've seen in a long time, just because when the door opens and the short or the longs try, well, maybe that was a Freudian slip. And when the longs try to get out, the corral's not going to have enough openings. So we'll see. I've been there and done that. Whether that's going to be the case or not this time, we have to let the market tell us that, I guess. But it's certainly, looking that way. We'll take a look here now. What happened with the New York Stock Exchange Index yesterday? We did go up. We did not make a higher high than the previous day, but we did come within 1 point, of 3 points of the exact 786 retracement there in the New York Stock Exchange Index. It missed it by a little bit and then closed near the low end of the range. We were a tiny bit lower last night for just a second, and then, of course, the news comes out that there may be a Greek deal, there might be a Greek deal, maybe they're kicking the can down the road, maybe they're not kicking the can down the road. We'll just have to wait and see. But this chart for the NYSE really describes it to me, because if you'll look at those 61% retracements that I've marked there, the one that happened on the real key day of March the 13th, we had another one on the Mercury going back direct station after being retrograde. That was on the 9th and 10th, but they're all connected by that 61% retracement. And if you'll notice how those cycles are connected here again, if you'll look at the cycle high that came in on the first cycle, came in late February, and then just sold off for 10 days to make the low. The next cycle in March crested right in the middle of the cycle. In fact, it made a double top up there and then has come down to the same thing. So we basically, that's the true trend line. It's not a straight line like you would ordinarily draw. It's drawn more or less like a parabolic, because that's how the market really operates, is in these sequences of numbers that are drawn in a parabolic spiral and not a straight line. So that low that we have now on June the 9th is just as important as the low that we had back on March 13th. That's why if we break that soon, that means that we're going to come down hard. And I believe we will make a 1.27 expansion of this whole leg from December through May. We'll make that sometime in the summer. And it will be, I think it's going to be pretty vicious. That's just my guess. The reason for it is the complacency that's in the market, the margin debt that's out there, the fact that there's virtually nobody that's afraid of anything, and the most important thing is the fact that everybody thinks that the Fed has their back. And that is a real tough way to think, I think, because it's not a good thing to really look at, in my opinion. Now, we did have a market that made a new high yesterday. That was the New York stock, the Nasdaq 100. Also, the big Nasdaq also did it. Made a higher high by just 2 points, and so we've got a sort of a triple top there in the Nasdaq, if that is in fact a triple top. We closed lower, and then last night the market rallied all the way up to the 786 retracement of that move, and then backed off a little bit. So it still could make another new high without any trouble at all, and get another 100 pips higher or so if it breaks out to the upside. So there's still that possibility there. However, time is running out. It just takes so much time to do these things, and if they can't get it done in the right amount of time, it's usually not a very good thing. But the Nasdaq has been the leader of the pack. The Dow Jones has been lagging, really quite badly. And if we take a look at the Dow on what the E-mini's done, and it follows pretty much what the Dow Jones is doing, you'll notice that the Dow E-mini could only get up to the 61% retracement, and then it took out those lows from Monday, and so Friday. Let's try it again. Monday. This today, Thursday. Yeah, the lows of Monday. That's correct, and that's near where we were on that close on Friday. So if we can close the Dow below 17,800 today, that would really be a negative sign. The fact that we had this long bar yesterday to the downside should be important, but if it doesn't follow through, then this market could break out and get up to the 11,000 or 18,000 level, because we're still in this real critical time period here. We've got this really big date coming on July the 2nd, and I can't really tell whether it's a low or high from this level, but it's going to be a pretty significant point to watch that. It's not quite as powerful as the one from March the 13th, but it is on a scale of 1 to 10, it's about a 6, where the one on the March the 13th was a 9, and those are the ones that we're watching for those times. So now I want to give enough time here to make sure I can cover the 20-min line stuff without any trouble at all here. So we'll see what we've got next. One other thing I wanted to cover on the market, why it looks so terribly bearish, is this, and that is, let me expand this chart so I can make it a little bit better here, and we can see what's and no problem. Yeah, hold on, and we'll see this, move this up a little bit here. There we go. I want to get this advanced decline line in here to show you what it looks like, because this is another chart that is really not very good, folks. This thing looks like a dying quail. I mean, look at this. Since March, back in May, we've had 1, 2, 3, 4, 5 lower highs in advanced decline, and look how quickly it drops when it goes down. That's not a good sign. Maybe I'm wrong, but that's the way it looks to me. You add it all together, it says be careful. The Mexican word for that is cuidado. So be very, 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 very careful. So that's what you want to do in my opinion. Now, I wanted to post one other chart that someone asked me to repost that we had from one of our friends in the Tiger Room. Basically it's from Elliott Wave's letter, and it shows the extremes of the stocks being above the trend line for such a long period of time. And as you can see, we've been above these trend lines for about 15 years, which is almost like we were back in the 1900s and stuff. So that's the main thing to keep in mind to watch it. We have a really, really big anniversary date coming up here on July the 5th. We have a big Astro Day coming on the 2nd. The 3rd is the holiday. We're closed on the 3rd. Then we have the 4th of July. That'll be the Saturday, and then the 5th is Sunday, and then Monday we come in on the 6th. Well, on July the 5th, 1932, the Dow Jones made a low of 32. The high had been made on September the 3rd of 1929, and then three years later, in July 1932, which was the start of the Great Depression, we Actually, it started before that, but that was the real start of it. And we had a low at that point. And the difference between 389 and 32 was 90%. So the stocks lost 90% of their value. Folks, it was 35 years before the market would get above the equivalent of those levels in the Dow Jones. During that time, one half of the Dow Jones stocks went bankrupt. I don't know if you know this or not, but American Telephone and Telegraph was the number. It had gone bankrupt twice during that whole time. So you just got to keep in mind that some of these companies can be mismanaged, and you've got to be extremely careful about it. But the message here is that even though the market broke down there, that was the greatest time in the world to buy stocks. Was on July the 5th of 1932. You couldn't have done any better had you done that. But it was hard to get anybody to do it because everybody had lost all their money between 29 and 32. So that's one of the reasons why being a technician is a little easier, than being a fundamentalist, because the fundamentalists didn't see this coming at all. But as Basil's pointed out before in some of his webinars and stuff, we have a lot of similarities with sky capers. Sorry, folks, I'm on the medication's is not the excuse; it's the reason. I have a little bit of a sore throat, but I'm okay. Anyway, the styles of dresses and things with short skirts. We have the skyscrapers. When they're trying to race each other, build one higher than the other. Automobiles, getting horsepower up to 1,000 horsepower for a regular custom car. I think that's the 1.2 million Bugatti. Just the regular, you can buy a nice Cadillac today for $62,000 that'll go almost 200 miles an hour. I mean, why do they have a car that goes 200 miles an hour when the biggest speed limit is, I think, 80, and that's somewhere in Wyoming. In Arizona, where we live, it's 75, and everybody drives 80 on Interstate 10. If you drive 75, you better be in the right-hand lane because they will run over you. So I think being 180 miles per hour, that's a little bit extreme. But there again, I'm getting on my soapbox, and I certainly don't want to. I don't want to do that. When I went through these charts again last night, there were a couple of them that I might as well start this about the 20-man line because I want to show you a really good example of it. First, we'll look at what happened when we saw it the first time. Let me get that banking index up here so we can show you. Oh dear, Larry, let's relax a little bit here and see if we can find it here. I always move them to the right side of my desktop so that I can pull them up quickly, but the problem is sometimes I don't always do it. Oh, okay, we've got to take a little break here, and I'll be right back, and we'll cover this again for just a second.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted into Tiger TV the banking index a couple months ago, back in May. We focused on the, I know it's just about exactly a month ago, we focused on this banking index because it had formed a 20-man line. It broke out of a downtrend line above the 786 level, and then it pulled back and touched that line one more time. Jim Twentyman, my good friend, has showed this to me many, many years ago. It's one of his favorite signals. You don't see it too often, but we have it in our scope right now because it's really getting ready to make a couple of these patterns that we're really looking at. We focused one yesterday, and I believe it was on Monday's show in the corn market. We had one that happened in December corn, and the market has been, quite strong, since that time. But the really important one that works with the stocks also is what's happening, with the utility index, because we have just made a perfect 20-man line 4 days ago. We sort of featured that as it rallied back to that level. And now, we closed lower on the week. We closed badly yesterday. Whether we're going to continue on or not, I don't know. Now, if we get back and we close above that line, then that'll no longer be bearish. So that's what your risk is here on the Dow Jones Utilities of what you're looking at. And this is related to the interest rates, and that's basically is saying that, the utilities are dropping in price, so their rates going up, and that's yield is going up. So that's what's happening is we're having an increase in rates interest rates are going higher. So this is a very negative pattern in the utility index. We've been down really hard for 3 days since we hit that level, and it looks like it's really in trouble. Now we have one other one that is also forming that is important to all of us, because it's one of the things that we watch all the time, and that is this is silver. And you'll see here we have a potential for a 20-minute line coming up in here that would be up in this area right here at around $15.95 per ounce. That's where we broke down from. If we get back to that level, that would be right at that 20-minute line again. So pay attention to that, folks. You don't see this very often, but if you do get it, you would have a double ABCD pattern at that point, and it would really be a good place to take a look at the short side of silver. I've been bullish for silver and gold for several weeks up until early this week, and with the weakness that we've had, I have to stand aside. And in fact, is I'm basically trying to short, but I have no position now in the gold. I came out of it okay, didn't make as much as I wanted, but I didn't lose any, so that's a positive thing. So we want to keep an eye on this, though, because we could be looking at this market coming down in asset liquidation type thing, but it's not a bullish chart on silver. Now, if we get above $16 an ounce, then there's a possibility that this is all wrong. We just completed the big ABCD pattern here on 2 days ago. We saw that one when you went from 1645 down to 1590 and then up to the 61% retracement to 1620. The ABCD measured to 1570. The market went to 1568. And then we've had a 2-day rally that is virtually nothing, which is another sign of some other bearishness that could be coming in. So we've got a 20-minute line that is formed in the utility index. We have a potential one that is happening for the silver, and we've also had one happening in the corn, and it's started to have a pretty good rally. Beans have not been able to sell off more than 20 cents. We had a high of 968. We went down to 948, and we're up around the 966 again, and 965 again, and it looks like we're ready, to break out and see what that is asking. We have a question from someone here in the den here. It says, do you think the 1.618 fib extension would represent a change of direction? Bill, I would certainly say with 100% that I really believe that. 1.618 is the number that I use as my fail-safe, get out of jail free card, because if you look at the Fibonacci spiral, the spiromegalis, it starts in the normal spiral as you see it in our Cosmos and in the chambered Nautilus and things like that. Well, the ending value of that spiral is at 1.618. Now, the market can certainly expand farther than that because the universe is infinite, and it goes from 2.618 to it goes to 1.618, then it goes to 2, and then to 2.618, and then to 3.14, which is pi, and then it keeps going out to square roots of other numbers. Well, for trading purposes, Bill, 1.618 is the get out of jail free card. If you're on the other side of 1.618, you're in big trouble, Bubba. So we'll be back here after the few words from our sponsor, and we'll see how much they're going to be bidding it up this morning.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the grains opened with some more strength, which is not unexpected because this thing looks like it's really turned in beans, wheat, and corn. Looks like they have a long way to go. If we can get the beans much above 972 or so, and then they're almost there now in the November beans, they probably are going to hit $10 very, very quickly and see what's really happening. But the weather has been a little bit better than what they call inclement weather. It hasn't been too good over there in the Midwest, and that's part of that El Nino thing that Rich Anderson talked about, way back in May, to sort of be expecting that. And we've had a pretty good run here in soybeans, and this is just the first leg up, as near as I can tell. So we'll wait and see what the markets give us, but that's what's going on right now. Now, I posted into Tiger TV a chart from Tom McClellan. Tom is the son of Sherman and Charlene McClellan. I met Sherman and Charlene way back in the mid-'60s, back in Southern California. They were trading out of the Clayton Brokerage Company, where Jim Twentyman worked, and then some of them came over to Conti Commodities office on Wilshire Boulevard to work with Roy Fassel, who was the premier commodity broker in the United States for many, many years. And Roy's retired, living in Bel Air, Westwood, in the Westwood area, trading all the time in his early 80s, still as vibrant as ever. And anyway, Sherm retired a few years ago, and his son Tom took it over. And I met Tom up in Seattle again just a few months ago, last year. Well, it was last July, I guess. The time goes so quick. And I can remember him coming into the office. He was about 2 or 3 years old. He was just a little toddler. And a little redheaded, cute as a button kid. I'd still remember him. And now he's following in his dad's footsteps, doing a great job. Well, the main thing that's put in here on this chart, it shows that he's looking for some type of a cyclical change coming in here near the same time that these cycles that we're looking at are coming in, right around that July 5th area. I say the 5th because it comes in on the 3rd, and we're going to be closed on the 3rd. So we're going to have the 3rd, the 4th, the 5th, and then the 6th will be that Monday, I believe. And that's going to be a really, really active day in the markets because we have Mercury moving around. We've got several other planets. We got a Bradley date. We got several other things that are really going on that I think are pretty important. You know, we'll see if that's going to happen or not. We'll have to wait and see. Now, we've had a request, and I'm going to try to do it if I can, and that is to take a look here at the Bradley model with the Dow Jones. And if you'll give me a second here, I'm hoping that I have it up here, still in my files here. We have we got the Dow is still holding up today, which is not unusual. And they're jockeying position that first hour or two. That we did make a new high yesterday, folks, in the Dow Jones, the NASDAQ. It didn't go much above, I think it went 2 points above the old high and then reversed by 50 points and then, you know, came all the way back to 70% of that. For some reason, it's not coming up. I have to put the new model in, and I have not. It's not. It just updates the model, and I'm unable to do that. I can put the Dow Jones chart in, and you can see how that Mercury cycle worked. It was really quite accurate. It came within just a few points of the thing, and now we've had this rally back to the 61% retracement, and so those are the kind of things that we're sort of watching. We got the Dow up 60, the S&P's up 6 or 7, and so we'll see what's going to happen with the rest of these markets. Whoa, they was up 6 or 7. Something just happened. There must have been a news announcement because the S&P just dropped 7 points as my little beeper on the wall triggered. So we'll see if that means anything or not. Okay. Another question that someone has brought to my attention, give me a second, I'll get the chart ready, and I'll give you a second here, is the Russell. I posted this chart in the other day showing some of the cycles that were there, and you can see the Russell is completing a butterfly pattern and a 3-drive pattern on the Russell futures. It's stopped exactly. It came within 30 cents of the exact high in that number. That was 1288.9. I believe it hit 1290.6. I believe was the high. So that should be it, and it should start to turn down. Remember, that's a big should, because maybe it will, maybe it won't. All of this is based on probabilities, folks. I wish I could tell you something more important than that, but there is nothing more important than that these are based on probabilities. The market is chaotic in nature, and within the chaos are these non-random patterns that we look at, but they're all based on probabilities, and if they fail, even the best ones we have are only at about 80%. You don't see those very often at all. So that's the main thing. We've had a question about Lennar and Toll Brothers, and I think the best way to look at that, just a second here, is I've got it written here. Someone asked me about it last night, and I did. There it is. I'm going to post the answer to that question about Lennar and Toll Builders is to look at the ITB. Which is the ETF for home builders, the Dow Jones Home Builders Index. And as you can see, just yesterday we completed a beautiful Gartley pattern up at the 61% retracement. And also it left a shooting star type pattern, much like the one that we did way back in April. If you'll take a look at that chart really closely and look at the high, back in early April when it was up around 28. You'll notice that shooting star pattern where the body of the candle is in the low part. That's exactly what happened yesterday, folks, as we had the body of the candle in the low part. So that tells us there's a strong probability of this market reacting. You've got the ABCD pattern on the up. You've got the Gartley coming down. You got the shooting star pattern. Your risk here is really simple. If it gets above 28, this thing is wrong. Until that time, it looks like it has a pretty good chance of reacting more, is what it looks like. From that particular thing. Now, I had a couple requests here for a few stocks, and I wanted to get through. By the way, if you have any questions, it's 877-927-6648. And I'll be happy to answer any questions for you, but I wanted to get a few of these stocks in to try to tell you. Oh, one was about the transportations, just to show you how bad that thing looks too. It's another one that looks like a really it's been in a down channel for so long, and it looks like it could be ready to start to extend to the downside, because the trend is getting worse and worse. It's making new lows, pretty much all the time. We had a big down day yesterday. It's basically unchanged right now, and but as you can see, this thing is broken below the 61% retracement. It's hit it 1, 2, 3, 4 times where it's trading right now. So if the transportations can't hold here, that's really a bad sign. And the other thing is if we go below that lower panel of this trend line that's there, that means that that pennant that is there, that channel that's downsloping, is going to accelerate to the downside, much like we've done in the Dow Jones Utilities. The Dow Jones Utilities is accelerating to the downside after that little short rally. All this stuff looks just so negative, folks. I just don't understand how people can even think about buying stocks. I mean, this thing looks like a dying quail. But, maybe my eyesight is bad, and, a lot of other things are not working. So who knows? Maybe that's the case. But that's neither here nor there what I see. So we'll take a look. Now, we've had a question about Amazon. I want to bring it up a little bit. And this market has been on its own run for a long time. And I just need to take something out. The secret stuff. Now, basically what I'm taking out is the volume. For some reason, the volume triggered in this, and I wanted to get rid of it. But I wanted to show the large ABCD pattern that we've had here in Amazon. That's completed, and now it should be in a typing process. But we've had a lot of big gaps. We had that huge gap, way back in February, that when the market moved up over 15% in one day. Then we had another one, way back when the market was at the $400 level. So these things can be affected by some of the news that goes on, and you can't stand away of it. I don't know how you can even think of selling stocks like this without the use of a put, or because even selling a call, you have too much of a risk factor involved, so you have to use the puts. And I know it's probably not the best thing to do, because put buying is usually 85% wrong. But if you time it right, I think that's the easier way to do it. But to give you the peace of mind of not worrying about these monster gaps. I don't like gaps, but that doesn't mean the market's not going to give them to us. So we'll have to wait and see. But we've completed this huge ABCD pattern in Amazon. The $64 question is whether we've made a double top up in here, and then you'd have to go back to what the rest of the market is. This pattern just does not make a lot of sense, because there's so many other things that we have that look to trade that look so much better. We have the Russell, we have the IWM, we have the VIX. I mean, there's a lot of things. Some of the stocks that we've actually taken a look at. All of that tells us that we're down in this area somewhat. So whether that's going to be the case or not, remains to be seen. We did have a little bit of selling coming in this morning in the first 15 minutes, not too much. The market's still up on the day marginally. We got the Dow up a few points, and S&P's up a couple points. It's still rather quiet, but it's going to be an interesting time to watch. Folks, that Gartley pattern that we made on that New York Stock Exchange Index, that is mother, God, and country stuff, folks. print that one out, because that's the key start. That's key stocks, because if we break below those lows we made on June the 9th, and we're not very far away, we're going to be looking at something really bad happening to the downside. I don't have any idea what's going on in Greece, and I don't think anybody else does either. And frankly, I don't believe anybody cares anymore. They don't have the money to pay the money back. And when someone owes you money that has no money to pay you, that's called a partnership. It's no longer debt or credit. You're between a rock and a hard place. How are you going to get your money? You going to squeeze a rock? Not a chance. One of my favorite stories, I've told this several times, but it's still one of my favorite stories, so I'm going to tell it again. It was in about 2 o'clock in the morning one night in Chicago. We were coming back from a Chicago Bulls basketball game, and we were in Mark Douglas's high-rise, and we walked on the elevator, and on the elevator were these two gentlemen. One was about 6'10", and I recognized him as the center for the Bulls. That was Butterman Love. He was with another guy, and this other guy said to me, he said, "Do you have kids?" And I said, "Sure." He says, "Do you ever loan money to your kids?" I said, "No." I said, "I give money to my kids. I never expect it back." He puts his arm around me. He says to the guy, he says, "Look," he said, "this guy really understands family." He says, "You never get the money back from the kids, so don't consider it a loan, consider it a gift." And that man was Ernie Banks, one of the greatest baseball players that ever played. He just passed away last year. Oh, it was this year. Yeah, God, it was early this year at the age of 88. But a real gentleman, and it was real exciting to meet him because he was a really nice fellow. He invited us to come up to the park and visit him and stuff, and it was really, really very nice. But remember, when you give money to your kids, don't consider it as a loan. It's a gift, and it's a gift of love. You know, you can't get it back, so you might as well just take it for what it is and move on to the next one, as they say in the trade. And Larry is stalling for time because I'm trying to find that Bradley indicator, and doggone it, I just can't do it. So I've got to go to the next chart that the people asked me about, and that was the dollar index chart that we talked about it with its big 61% retracement that happened this past week. And we'll get that up right here. We've had a really nice run in that. We're having a tiny 2-day, and it's very tiny too, correction. Very tiny too. Boy, that's really good tarot in English, isn't it? Hold on a second here. We'll get this up here. All right. Okay, as you can see, we made a double bottom at the 61% retracement in the dollar index. We've had a couple of days of strength. We're selling off just a tiny bit right now, but this is a major bottom. If we get below the lows we made here on the 16th last week, this thing is going down. But right now, the bullishness is to the upside. We've had a nice correction since March. Stopped exactly at the 61% retracement of the previous low at the end of last year in December. And, you know, it looks like the dollar is going to strengthen. I don't have any idea of what that's going to do, you know, with the euro, because the euro is, you know, it should be really strong considering they don't think that Greece is going to exit. But let's take a look at the euro here. And, you know, we've had a pretty good correction from that 114 level. We got all the way down to 111 and change, and now we are, let me get this up for a little bit daily here, see the better. Yeah, there's the daily here. You can see where we are with the double top, and then I want to do the weekly here because this is what I really think is going on with the euro. If you look at the weekly chart, it's really quite clear that we are heading down towards this 99 level. That's what it looks like to me. Now, I don't know if that means that Greece is coming out or going in or whatever. But, you know, we broke below the 61% retracement. We've had a really strong rally here now for about 10 weeks. And that's about all the rally you're going to get. And we stopped at the 382 of the previous high that we made. And all we need now is to get the euro below 108, and it should go to down to par at around 99. I'm going to take a little break here, and we'll finish up the show.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Back, folks, and I posted the chart that I think is the most important, and that's that New York Stock Exchange Index chart that shows the where we are with the excuse me one second, where we are with the Gartley pattern. As long as we don't get above 11,200 or so, this is a valid Gartley pattern, and it should be looked at as a potential for a longer-term move, to the downside, especially if we begin to break below some of these things that we've been watching for some time now. This is the way it looks to me now. We do have a potential here. We're very oversold in the bond market, and we have a potential in the bonds to get a little bit of a rally here. I wanted to put this in here. It's a 4-hour chart of the just 1 second. There we go. Hold on a second here. All righty. There we go. Get it up here where I think we're going to, oh dear. This doesn't draw a very good line. Hold on, I've got to correct something. This thing's got a very sensitive magnet on it, and when you try to catch a certain high or certain low, if it doesn't catch that, you're in big trouble. But we could easily get a 3-point rally here in bonds without any trouble at all. It would really be really interesting to see if it gets there up around the 152.20 level. That would also be a 5-wave expanding triangle going up into that level based on the last 10 days of trading. So just keep in mind the importance of that New York Stock Exchange index chart. That's the one that you want to be watching. It should be the key to whether you decide to go long or short, because as long as we stay below that line in the New York Stock Exchange at 11,174, I think we are headed down. If we get above 11,200, I'm wrong, and the market will go higher. We're coming into a really key date. A week from this Wednesday. That'll be the 3rd. We'll be actually the 2nd. The 3rd we're going to be closed because of the holiday, because July 4th is a Saturday, and so we'll be watching this very, very closely here in the next few days of what we're watching. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.